They're not on board talks. Shouldn't be. I wonder about that.
Were they provided?
I'll tell you what we have.
The only thing I saw was the annual report, which was like 58
The
pages.
draft, yeah, got that.
But I was wondering about the management
Yeah,
letter.
that's what I kept asking about yesterday. Jeremy, do you have a copy of that? I don't have a copy of that. I've got the, your presentation to the board, the overview of it.
Let's just proceed with that. You can tell us, let's just proceed with the presentation if they're going.
Okay, yeah, we are live now.
Right. Okay, Brian, can you bring up the, I think it's like a, what? There we go. Thank you. All right, proceed.
I've also will cover this. I presume that you have received it.
Yes.
So again, it's kind of covered in my presentation. So again, this is a report to, we use this same presentation to the board. I'll probably go ahead, but this is to the finance committee meeting, and this is the financial and compliance audit for the year ended June 30, 2023.
Time out. Juan, can we turn the tables so that the camera is not on his back? So he's talking, well, it's a little awkward from the video standpoint where it's just, you can switch just podium.
Switch the podium around.
Turn it. No. Turn it so it's facing, no, the other way. Just facing this way, so he's facing us and people can see a little bit of his face on that. Okay, thank you. Back, that's your profile from the backside. All right, go ahead. Sorry.
I don't know how to respond to that. I'll try to get back onto accounting. Please turn to the next page. A little bit about Hood and Associates CPAs. We serve Missouri, Kansas, Oklahoma, and Texas. We also go with what's called a peer review, with an outside accounting firm will come in and review our internal control policies and quality control policies. And we have been awarded the highest rating as a result of that review. We're members of the American Institute of Certified Public Accountants, the ACPA, the ACPA Government Audit Quality Center. One member of our government services audit team is also a reviewer for the GFOA Special Review Committee. That happens to be myself. And we're licensed to practice in Missouri, Kansas, Oklahoma, and Texas. Now, the scope of the audit, we were engaged to audit the financial statements of the Consolidated Library District Number 3, also known as Mid-Continent Public Library, for the year ended June 30, 2023. This report, once it's accepted as final, will be presented to the Government Finance Officers Association, or the GFOA, for Certificate of Achievement in Financial Reporting. Again, the library first started this program in 2011, so this will mark the 12th consecutive year. And we believe that this presentation and this audit will again qualify for that program. Again, there's not many organizations that do file this particular type of report. What it includes is a introductory section, then the basic financial statements, which all governmental use. And then the final section is a statistical section, which has 10 years worth of information. It's very useful in evaluating the financial results of the library over the last 10 years. Our responsibilities as the auditors is to conduct our audit in accordance with generally accepted auditing standards, as well as governmental auditing standards. We're also responsible to plan and perform our audit to obtain reasonable assurance, but not absolute assurance that the basic financial statements are free of material misstatement. That means that we take a risk-based approach in looking at various audit areas, and we test transactions and other items, but we do not do complete testing of all transactions. That's why we cannot provide you absolute assurance. We're also responsible to report on internal controls and compliance with laws and regulations.
Michael. That's a
Next page,
question.
please.
That last point, when you say laws and regulations, what's the scope of that? That seems rather broad.
Okay, that will be finance-related laws and regulations, budgeting, making sure that your investments qualify under statutes, grant agreements, those types. So it'll be finance-related laws and regulations. In fact, that's a good point. I will update our slides so that it's a little more precise as to what we're engaged to do. Next slide, please. Thank you.
Skip a page.
Thank you. Back one, please. Page 4. Thank you. The Auditing Standards Board of the ASCPA recommend we communicate these matters to the governing board. First, illegal acts, none came to our attention as a result of our audit procedures. Changes in significant accounting policies. The library adopted 2 new accounting policies. Government Accounting Standards Board GASB number 87 related to leases and 96 related to subscription-based information technology arrangements. And those are included in notes 3, 4, and 6 of the financial statements. Basically, with these new policies and reporting, it's basically taking what were previously operating type leases, and it's now capitalizing those as a right to use asset and also offset by a lease liability. And also on the subscription base, it's very similar, right to use a tangible asset that relates to your computer software with an obligation. As far as your budget, you're still going to make the scheduled lease payments or financial statements. It changes those to kind of an asset that will be amortized or depreciated and a liability that will be amortized as far as principal and interest. So that they kind of offset each other. But that's new requirements that are required by all governmental entities.
Just, am I correct? This is 87 is a balance sheet presentation only. It doesn't change the way the expense is recorded.
It does change the way the expenses recorded in the fund statements. So for instance, if you're making a lease payment, and on Red Bridge is the big one that you have, a component of that, let's say that would have been 100,000 for the year. Previously, before implementing these new standards, that would have been lease expense. So now that 100,000 may be reported as $90,000 lease principal and 10,000 as lease interest. Still, the 100,000 is reported, and then when it goes to the government wide, that's where you see the addition of the asset and the liability. So the amounts don't change, but just the presentation of how leases are reported on your financial statements from a fund level change.
Michael, is this kind of like FASB 13 that the rest of the world had to live with for decades?
Yes. However, there's this new there's a new FASB similar to this that really eliminates the operating lease.
Right.
So I think what it addresses, the GASB is following private, saying there's not going to be no more off balance sheet assets that people were not reporting. Got people in trouble.
FASB 13 put the operating leases into the footnotes as a commitment.
It did.
Whereas as the new FASB and this new pronouncement put the commitment on the balance sheet.
I agree. It capitalizes virtually every lease that's over 12 months.
That's a short version of pronouncement.
Of debt. And we're pleased to report we had no difficulties or disagreements with management, and we had full cooperation and access to the books and records. On page 5, financial and compliant audit really addresses these three basic questions. Are the financial statements free of material misstatement? And our response is we have issued an unmodified, again, this is a draft at this point, opinion that indeed the financial statements are fairly presented in all material respects. Question number two, are internal controls over financial reporting adequately designed and operating effectively? Our response is we did not identify any deficiencies in internal controls over financial reporting that we consider to be a material weakness. Again, had we done so, we are required by our profession to report those to the governing board. Finally, did the library comply in all material aspects with finance-related laws and regulations? The results of our testing disclose no instances of non-compliance or other matters that we are required to be reported. The next section is the management letter, which I thought had been included in your packet. So this includes comments and best practices. And so the first comment was the Formis Financial Operating Assessment Report. And we had noted that there were several recommendations that had been implemented, and there were several that had maybe not been implemented but are being considered. And those were listed in this required communications. With our recommendation is that the library management continue to review and evaluate processes in considering the potential implementation of these particular recommendations. We also recommended that consideration of this, that you consider and evaluate the need to update related board policies and procedures as they relate to the purchasing cards, capital projects, and others that may be deemed necessary based on this review. So that was what was included in there. The second was future accounting pronouncements. And we are down to only three. I mean, this list, if you recall, like you've been here around, it was long. So we're down to three. I don't see any of the new ones going to have a significant impact on the financial reporting of the library. There has been discussion, nothing's been passed yet, is they're looking at changing the whole financial reporting concept of governmental financial statements. We'll see how that goes. Again, they're looking at overhauling GASB 34, which has been out since 1999. So that's kind of a wait and see at this point to see how what they'll come up with next. And looking at the next one. Page 7, please.
Another page.
Yeah, this was just a little summary of the financial results. Again, these are included in your financial statements. Again, from a government-wide standpoint, which includes all of the library's assets and liabilities, and deferred outflows of resources exceed liabilities, resulting in a net position of $156.3 million, which was an increase of $6.6 million from the prior year as revenues exceeded expenses. As you can see in the chart, this is the amount of your net assets. A vast majority is your investment in capital assets, net investment in capital assets, which is all your capital assets, your library buildings, furniture, fixtures, land, etc., less the amount which of your debt, which is really the 2018 caps, leads to about 66% of your total net assets. 8% of your total net assets is restricted, which leaves approximately 25% as unrestricted. And that's kind of shown on the next page, please. Shows at the bottom, here's your net position, and that's the graph we just discussed. The library's most significant government-wide obligations are related to the Series 2018 certificates of participation. with an outstanding balance at June 30, 2023 of 55 million. Also included in obligations are the other post-employment liability, also called OPEB, which is about 5.2 million. On, I guess, a positive note, the library did report a net pension asset, and this goes through the loggers, of about 11.3 million. This was compared to 19.5 million the prior year. Again, if you look in on page note 7 is the loggers footnote, and we'll give you all that information. And then if you look on page 46 and the required supplementary information, it gives you a 10-year comparison of how that asset or liability has progressed. And really the big change in that is the investment income of the assets were 26 million in 2021. And it was only 80,000 in 2022. So again, what they do is take those and kind of recognize those over 5 years to kind of smooth out. And those are called deferred inflows and outflows. They kind of get recognized. Again, if you look down at the very bottom of the page, probably hard to see, is the restricted assets for pension benefits of 11 million. That's the net effect of your pension asset minus your pension deferred outflows and deferred inflows. On page 9, general fund increased about 4.4 million for the year ended June 30, 2023, resulting in an ending fund balance of 39.1 million, of which 28.1 million is unassigned. The unassigned fund balance is approximately 47% of the 2023-24 budget expenditures. So just a little less than half, which would again make sense in that you're a June 30 year end and you still have another half a year to expend the resources of the property tax that you have on hand. On page 10, and this is the fund financial statements. Again, that kind of outlines your general fund, which is your major operating fund, the capital projects fund, which accounts for the proceeds of 2018 bonds and your expenditures related to the capital plan, the debt service fund that funds the debt service components of the 2018 bonds. And you have a column called non-major governmental funds that have your various grant funds and other smaller funds. So again, looking at the general fund, total revenues were about 58.5 million. This is compared to 57 million in the prior year. The biggest change in the revenue, property taxes were about equal. But the change in interest was about 1.2 million, as it was a loss last year based on the net market value adjustment. And so the difference between those two from 2022 versus 23 was 1.2 million. And then fines and fees increased about 200,000. We're looking at expenditures. They were 54.2 million. This is compared to 50.8 million the prior year, which is a $3.3 million increase. 2.3 million related to personnel for base pay and increases and additional hires. General expenses for internet utilities and furnaces, fixtures, and equipment. Looking at the capital projects fund, again, that has seen a steady decline as the proceeds of the 2018 bonds are expended for capital projects. And, you know, eventually that those funds will be expended. And I guess the project's plan is getting nearer completion. And then again, on your other non-major funds. The most significant funds of components of the fund balance are the Community Foundation Fund, which has 387,000 of fund balance, and then your grants and gifts fund that has approximately 706,000 of fund balance. And then your financial statements that are individual non-major fund financial statements after the footnotes. And page 11. Hood and Associates, CPAs and associations with Ralph C. Johnson. Ralph had other commitments, could not be here today, but he plans on coming to the presentation to the board on Tuesday. We certainly appreciate the opportunity to serve Mid-Continent Public Library. And with that, I'll try to answer any questions that anybody may have.
Michael, just recapping, we have an unqualified opinion. There are no material weaknesses noted in internal controls, and there's nothing material to report in the management letter. Is that basically it?
Unmodified
Well,
opinion, but no, commonly referred to a clean opinion. That's the highest level
as you
of opinion. Yeah.
using the old terms, yeah.
Yeah, the one was even more unqualified and qualified, but yeah, so it's a unmodified and clean opinion. We did not identify any matters in internal controls that we consider to be material weaknesses, else we would have to report that. And we did not identify any non-compliance with finance-related laws and regulations. So overall, a very good report. Certainly want to thank Aaron and Juan and the staff of the library, very professional in working with them, very helpful in giving us the information that we request in a timely fashion.
Thank you. Comments on your side?
No, it's been a pleasure working with you and been very thorough and appreciate your work.
Thank you. Bob, you have any questions?
No.
No, I don't either. So thank you.
I have one more question. We have typically, this meeting has been held before the regular board meeting, so we've always done a draft. Now, would you want to continue to present a draft on Tuesday? Or can this board accept and we go final? That's
Well, the committee doesn't officially accept the audit.
Okay.
That's the board's responsibility. So based on where we are, unless you make changes between now and Tuesday, you'll issue final, is that correct, before the meeting? I'm assuming.
First time.
I'm fine with going with the draft again.
Well, what have we done historically?
Historically, the meeting has been at the same day, so.
Right, but you have to get your, at least, again, I haven't audited for a long time, but you have rep letters and.
Oh, yeah.
Is
We
everything?
would still have to get all of that stuff.
Okay, but assuming those are done, do you then go final?
I could.
Okay, so if you have it, we'll approve the draft here.
Yeah.
And if everything's done, then we'll present the final.
Yeah, we're waiting on the attorney letters, and then once we get those, we'll send a rep letter to you guys to say. Just saying, I think we can do it.
Okay, I know how that's works.
Everybody.
Somebody make a phone call and get the attorney to get.
No, we're on it.
All right, so then I need a motion to accept the annual audit and the communications to the board.
So
Need a second.
I second the motion.
All right, Teresa, will you take, I assume we're not online?
Yes, we are.
Oh, we are? Oh. Who's,
And I'll be on.
okay,
Brian, we are live, correct?
That's correct. Dr. Pandolfi's on and Michelle Wyckoff is on.
Okay.
all right, great. I'm sorry, did Michelle or, I'm sorry, I didn't realize they were on. Do either of you have questions or comments?
Yeah. No, I'm good.
All right, let's take roll.
Okay. Mr. Johnson,
Aye.
Dr. Pandolfi,
Aye.
Wyckoff,
Aye.
Please,
Yes.
Mr. Cook.
Yes.
Motion carries.
All right, Michael, thank you. We'll
Thank
see
you very much.
We'll see you Tuesday.
Thank you.
Okay, next up is our monthly financial statements. So if we can pull up. Can you pull that up just a little bit so it's easier to see? Fine. Okay, thank you. That's good. Who's handling this?
Well, I think technically I am, but with my 1 week of experience, I don't really have a lot of analysis to share with you at this time. So, Juan, unless you have anything to add, I think we'll just throw it open for questions.
Oh, I don't. Okay. I just point out that on the bottom of the second page, that the $9 million transfer was made into the capital fund. That the current year to date excess of expenditures is about 7.5 million. And last year we were at 11.1 million. It looks like you made some timing changes on expenditures and so forth. But I don't see anything unless, Aaron, you have comments in here. I don't see anything that is unusual or major. Is that correct? Okay. I do point on the next page, Brian, on the balance sheet, that I had a question this morning, but the capital fund has a surplus balance of 13.1 million. And you can correct me if I'm not comparing apples and apples, but our commitment for the capital fund that we'll get to later is about the same number, about 13.1 million. So based on that, we have adequate funds, ignoring the timing of the bond, the maturity issues on the bonds, but the capital fund has adequate surplus and assets to cover the remaining commitment on the capital, on the Prop L projects.
We'll be very close.
Yeah, it's close. Yeah, I mean, it's the next page is the capital fund. Yes. Yes. Anyway. Anything unusual there? Nope. Just disbursements, and you can see the $9 million again. Interest in the market value change on the bonds. So, okay. Next page is the what? Unless you guys have comments on these other funds, we need to go through those. I don't know, Quan. Okay. And skip to the investment page. Did you go too far? I'm sorry.
Investments is the next section. There's a few more pages.
Oh, hold on. Oh, we have the disbursements. Unless people have comments or questions on the disbursements, Michelle or Yummy, do you? We're just gonna go over that.
No, I'm good.
Hearing none, let's keep moving. Skip down to the investment page. Okay, so again, just to remind you, the assets in the capital fund were put into longer duration bullet bonds. There may be some of those agencies out there that were callable, but because of the coupon rates on those, some of which are below 100 basis points, they are not going to get called. The maturities of those, we have some in 23, about 2.5 million, 3.7 million coming in calendar 24. It's not fiscal, that's calendar. And then 10.2 million in calendar 25 and 9.3 in calendar 26. So again, that's not going to change unless we decide to take a hit on the asset side. So we'll continue to ride that wave. But those are the numbers. So Again, the bulk of the assets don't mature until 25 and 26. Questions? Last schedule you have is personnel. And it's like pretty much on budget. Yes. Okay. So unless there's questions on that, we're going to just keep going. This is, I like this format. It's very helpful. So, Ron or Bob? Nope. Keep going. Okay. All right. So that takes care of the financials, unless anyone has comments or questions. The capital plan update is, wait a second, 8.1. Go back. There we go. Next page. Yeah. All right. So this is the format that was presented in January, if you recall. Numbers haven't changed much at all. I think Lonnie told me it's like $5,000 of net change. So the funding that was in place at 100, or if you go down to the bottom in the yellow highlight, 114,840,000, that was the funding as of January, I believe. And then the $9 million transfer that was made in July. So the net, what I call the net cash deficiency is 4.4 million. And then we have the New Texas interest income of 3.8. So the cash deficiency at this point is a little over 600,000, and that includes the contingent. The estimated cost includes the contingencies, correct?
On the construction side,
Yes.
the estimated cost of construction contingency as part of the GMP.
Well, but in the number here is some of this. So I'm just making a point that if the contingencies don't get spent, that 600,000 will be reduced, could disappear.
It could, yes.
Right. That was my only point. So that would be nice. Nice if that occurred. Okay. So that's it for the update on the capital plan. Cash flow projection is the next page. Keep going.
Yeah, that's all
Nine.
the slides.
There's no attachment.
Oh, we didn't get, oh, there wasn't, there wasn't. Oh, all right, well, I have it printed out. You want me to take it?
Well, we didn't, I don't think we submitted.
I never saw one. So I thought this was a discussion item. I'm sorry.
I thought there was a file out there. Isn't there a file out there, Teresa? I didn't make this up.
All we have is a capital plan summary, which is, yeah, you the total number of pages.
I'll have to look and see where I printed this off, but I thought this was the.
Yeah, so is that a month or two old?
Well, I printed off what I thought was I had for this meeting. So, and then I printed off the January finance meeting number. So I'm just going to give you 4 points here. The cash flow, the operating cash flow deficit projected at this point, or at least as of this schedule I have, is a little under 5 million. And that's again through November. And in January, that number was 14.1 million. So the combination of expense changes and cash flow outgo that you've done as part of the budget has reduced that by almost 9 million. And then the 24-25, which is obviously 12 months down the road, in January, that number was 16.1 million. And it is now projected at, at least this most recent schedule I have is 9.4 million. So that has been reduced as well. But again, if we took this out another 12 months, that would probably disappear because we have $10 million of bonds maturing in, on the capital fund in the 25, 26 year. So it's just a two-year period where we're having to deal with that. So that's the update on cash flow. Unless there's questions. Other questions? Hearing none. Item 10.1. If you remember, we had sent out the RFP for the Prop L review. The work that was done by CFO Systems to prepare the RFP. We received one response from CLA. That was it. And I think we talked at the July meeting, we were going to do some inquiries with some other folks or some of the people we thought would respond. I did make an inquiry. And the concern that I heard was that the dollar amount that we had budgeted was not adequate for this size project. So the other thing that the comment I received was that there was a question about whether or not we would find anything of significance in terms of, I'm not sure what term to use. It's a difference, I guess I'll call it funds being spent inappropriately versus funds that were spent and decisions that were made, and there's really there's no recourse on that second one because those things were approved, decisions were made, and construction was done and costs incurred. So it's a judgment call on whether that should have happened. But the fact is there was nothing I'll call technically illegal or fraudulent about it, but funds were expended. So the discussion Aaron and I have had just to kind of figure out where we go with this, and this is really opening up for the committee at this point, is, do we proceed and raise the budget and go out and with the intent, and I'm guessing that it has to be raised significantly, or the alternative is we take a different approach. One approach is that we take advantage of this situation and the experts we have had engaged to help us create a process, a framework for how these things are done going down the road. As you recall, the board was not aware, as I presented in April, the board was not aware that in the aggregate, the spending was well in excess of what the original approved budget was. And everything was approved on a location bar work package basis. The numbers that were presented on the dashboard did not reflect the true cost or the total costs that were being incurred. So those are two options. I guess I want to hear what everybody else thinks. So one is we go back and raise the budget and proceed with some type of review. And the second one, at least from my view, is we somewhat like, I don't want to say it's not like the Forbes review, but it would be similar, where we bring in the experts to help us craft processes and policies and procedures so that this doesn't happen, so the same situation doesn't occur. So I'll open up for discussion.
Okay, I'll start off then.
Okay.
I think the latter point you made is probably more where I'm going to be anyway, and that we've certainly discussed this for a long time. It's very apparent. Anyone that's part of the employee structure here, management structure here, is aware of what's taken place for the last few years. I don't think that's going to be repeated. The other thing is I was looking at the budget that we have passed for this fiscal year, and that is we just are 2 months into. It's a tight budget. And I'm not sure, revenues and expenditures, I'm not sure I want to be engaging in additional expenditures, which I don't think we necessarily need. So I would rather just pursue the second point you made, and that is just kind of use some of the people that we've talked to currently and in the past and not take on a new contract.
Okay. Ron?
Yeah, my thought is similar to Bob's. I believe that the information that could have been received from an in-depth and expensive examination is already now before this committee on the board. And I would focus on the fact that although the use of the funds was not as presented to the board and this committee, to the dashboards and so forth, they were nonetheless approved and for projects that I feel are worthwhile. I think enough information has been received that we don't need the cost or the time and the commitment of staff. And we've learned enough that through openness and good policies, what happened will be repeated.
Michelle, if you're still on, I know you have a hard drop in about 2 minutes. Do you have any comments? Or does she already leave?
Yeah, it's not even worth it. I'll go along with it. It doesn't matter. It's fine. I'll go along with what you guys say.
So, okay, so you support the second option then?
I do. I'm more of a principled person than probably most. So, but I understand nobody's ever going to be held accountable, and that's the way life is, and that's clearly the way government is, and that's fine. We're all good.
Yummy?
Yeah, no comment at this time.
All right, so we need to officially, we need to officially decline.
Yes.
So I need a vote on that, is that correct? So I need a motion and a second to decline the response from CLA.
Yeah, I just move that we do not accept the offer from CLA to provide the services. And that we, that's fine.
I need a second.
I'll second that.
Okay, Teresa, will you take the roll?
Yes, sure. Okay, Ms. Wyckoff?
Maybe
Just drop
she had to drop at 10:59, it's 10:59.
He did.
Okay.
He did.
Okay, Mr. Dees?
Yes.
Dr. Pandolfi?
Aye.
Mr. Cook?
Yes.
Mr. Johnson?
Aye.
Okay, motion carries.
All right, thank you. Okay, so I guess if we
Notify them.
yeah, you'll notify them. We need to resolve this, or do we need to kind of have discussions with people? So back to, if we proceed down the second path, we have two experts. We have people on staff through we're managing things currently at CFO Systems. They're both experts. I'll repeat that the statutes allow us to hire experts without a formal bid process. Board policies allow the same. So if that's the consensus of the committee, then that's the path I would suggest we go down. I think we'll spend a whole lot of time again with staff. Staff has enough on its plate, having to go interview a bunch of people and increase our costs. Don't think it's necessary at this time.
I don't know if you need a formal motion now, but I concur with that. I don't think we need to spend a lot of time and effort on this any further.
Well, the effort will be on to.
I think it's ongoing here. I mean, I think it's very apparent that management and board are aware of whatever may or may not have happened in the past. We don't want this to continue on.
No, I'm talking about where we use our experts, because right now.
Oh, yeah.
Our processes, our process expertise is with a third party. And I guess Aaron is it, but there needs to be some structure to it.
Sure. And that type of work is not currently within the scope of work.
Right.
So we would need to engage them in a conversation.
But in the budget for the current year, we have professional fees of, I think, $70,000 for this project. So we don't have to increase the budget. In fact, I don't see this taking anywhere near that amount of money.
That's correct.
So,
Because we're not, I think this was 60, if I'm not mistaken.
right. And I don't, does that require a budget change if we change the nature of the project, Juan or Jeremy? Or is that within the purview of the management and the board? Is this, I should say management to change at the direction of the board?
I believe the current year's budget can cover it as long as it's below $60,000.
Okay, all right. So let's proceed on that basis. We'll have that discussion at the board on Tuesday. Okay, makes sense. I mean, and this is not a fire drill, in my view. This is just something that needs to get done over a reasonable time. And I'm not going to think we put a deadline on it of the end of the year, but whatever fits into the workload cycle, as I guess I'll call it.
All right. Let me just ask for my, next week, an answer next week is fine, but I have our budget. Where is that, under what subject is that located? And I don't need to write that, but next week.
It's under,
yeah, where is that?
it's under professional fees, 5460. Second page.
Got it.
Okay.
Okay. Yeah, it's what is this? We have more fees in that.
Yeah, it's in there. I know it's in the, okay. So we'll, I don't think we need to vote on that, right? Okay, no, good. All right, good. The levy. Okay. Clicking right along. You want me to do this, or you want to do it? Or Jeremy, or what? What's your recommendation?
Sure, I'll
Let's
take.
I'm gonna ask for. Can you pull up the, Brian, can you pull up the charts before Jeremy gets into the details? There are some charts and a PDF. And for those of you who've been around, you saw these previously. This is updated with 22 and 23, well, 22 actual data and 23 current valuation data that is, I believe, final. We've received final from all the counties at this point. The calculation for the levy has been reviewed at the state level. So this is just to provide some historical perspective about values and where the levy was. And again, we're not going to go through this bar by bar, but the first chart you have there is are the assessed values. You can see how that stacks up over time, and where the levy was. The increase in the levy from 16 to 17 is due to the Prop L vote. And then the decline that's taken place corresponds to the valuation increases that you see in the vertical bars. So in Missouri, the valuation changes occur on the odd number years. So 17, you see 17, you see a big increase in 19, and again in 21, and again in 23. So it's a 2-year period, and theoretically, they set values at the market value as of the end of the calendar year, previous calendar year. So those will be the 23 column theoretically represents market value as of December 30, 2022. And the lower bar just is the same presentation. It just shows you each of the counties individually. If you go to the next page, this shows the 3 counties and the actual tax revenues. This is the current tax revenues. This is not all tax revenues, or doesn't take into consideration the delinquent flow. This is just if everybody paid the bill on the time, this is how it goes. You can see again, all the counties show increases from 16 to 17, and then you'll see a gradual increase thereafter. In the most recent year, it's interesting that Clay and Platte have dropped, but this is kind of the dynamics of the 3-county structure and the levy hitting 3 counties. So I suppose if every county followed the exact same practice and method and was consistent in how they valued things, we'd all look the same, but we don't. And that's not the case. So Brian, if you scroll down to the bottom, you'll see that there's the 21 to 22 numbers were slightly down, and then it ticks back up for 23 for total property taxes. So again, that's just for historical perspective. I can't explain what happened for the 10 years or the years prior to 16. All I know is in recent years, the assessors are, I think, playing some catch up. Okay, I'll turn it over to you. Jeremy.
Yeah. So what staff has prepared, as you alluded to earlier, we get the assessed valuations certified by the county clerks. All 3 have certified now. Staff then takes that calculation and submits it to the state to verify accuracy of the calculation. We've also received that back, and that's what you have before you. The memorandum dated September 12th is from the state auditor's office. That's outlining the final calculations for the levy. So the levy ceiling from last year was 0.3240. That included the 2-cent voluntary reduction that the board took. The variation between, or the drop in the levy is the difference in the increase in assessed valuation beyond what Hancock allows, which is the adjustment for consumer price index as well as new construction. So to attain the revenue allowed under the Hancock Amendment, the levy would be reduced from 0.3240 to 0.2911, which is what's being presented for adoption by the full board and for your consideration today.
Thank you, Jeremy.
Do you want to walk through this schedule here as well? There should be, Brian, there should be another, I don't know if it's up in PDF or Excel. The tax rate 2023 file. That's under 11.1.
Let me see here. Is this it here or?
No,
Yeah, I think it's page 58 of the presentation document.
There you go.
Okay.
No, sorry, I'm not really sure what to walk through. I think this is just an analysis comparing the last fiscal year with various iterations of the budget process. So an early projection, I believe, if I'm not mistaken, that's a projection that.
Yeah, you want me to do this instead because I'm more familiar with it?
Sure.
Yeah. So this is a schedule, Quan. I think you did this for the June meeting. The same format?
Ad hoc budget.
The May meeting, the same format. It is updated with the 22-23 actual, the the current year's levy projection that was done in September of 22, when the board approved the levy, the voluntary reduction. The third column is the current year's budget, and then the fourth column of numbers is the amounts based on the current year, current assessments and the 0.2911 levy. Just for perspective, when we did the levy projection back in September 22, we took two approaches. One was what we thought a midpoint, best case number, and then we took a more conservative approach, assuming nominal increases in the revenues. Those are the numbers in the second column. In the aggregate, while there's fluctuation by county, the estimated revenues we had for in September 22 for this current year were $63,438,000, and the budget is about 1.1 million higher. What's actually coming in or projected to come in is 63.4, but that assumes a 93% collection rate. The actual historical collection rate is closer to 95, correct?
Last year was 95.
95. So we're presenting a conservative approach here. Each 1% increase would be $585,000. So if we got to the 95, we're basically in line with the current year budget. And I know there are places in the country where the economy is not like the local economy, so I'm not aware that we're going to have. I'm assuming we're not going to have collection issues. We could end up again. This is the low point, but we hopefully will end up closer to where we are in budget of the 64.5. Some of those things, the big change, Quan, on the railroad and utilities is down 24%. Can you provide some color on that? What's going on?
There are state assessed valuation and the local assessed valuation. On the assessment and the levy projection was based on those two assessed valuations. And but when we received the tax deposit from the county, there was no separation of those two revenues. So the comparison is kind of misleading there. And the collection rate usually is much higher than the average collection rate for railroad utilities. So I believe it's very close to last year's number, the total number.
Okay, so you're thinking it's going to be closer to 2.5?
Yes.
Okay. Anyway, that's I wanted this up here, one, so we can see where we stood last year, one, just to see compared to how we approached the levy calculation last September. This is basically saying, that Quan is pretty close to the numbers on it, and there are some nuances with the value increases and the shift in the counties, but overall, it doesn't look like we're going to be significantly off from budget. So, any questions from anybody?
A couple of things. First, I just want to verify that the public meeting we had back in the summer, that qualifies for a public meeting.
The levy meeting? Yes.
Yeah. Okay.
We
don't have to have one for September.
No, well, let me back up. I think the meeting in July, again, correct me, is to review the budget.
Right.
And then there was no discussion on, the levy that was discussed is tentative, but it's based on this being finalized.
And then I was also, I don't have the, why do I have information from Jackson County in terms of TIF. I want to go to TIF. I don't know if we have the other two counties, but here's what my question is. I have two questions regarding TIF. Do we have anyone in the district that is following up when TIFs expire? And if they're expiring and we're aware they're expiring, we validate that there may be surpluses in these. I mean, I don't know, that's my first question. Is there anyone in the district that actually is tracking when TIFs? I know that we have people there when they're passing the legislative bodies, but 23 years later, do we have anyone following that's a TIF is going to be expiring?
Well, we're not actively tracking, but we are notified when they do. And last month, we were notified that when an Independence expired and the county then is reimbursed us or given the money.
Well, and that was my whole point, that if there, and generally there are surpluses. So yeah, if someone was following up from political subdivisions in total, or so I just want to make sure we are tracking or somehow notice when TIFs expire.
So this came up, I don't remember, June, May, and I thought there's nobody out there that I'll call tracks. There's no tracking mechanism.
I don't think so either.
There's no law firm, accounting firm, or otherwise that does. I suppose everybody can chip in and pay for that. But so we're relying on the taxing authorities to properly notify, each of the agencies about where they stand. And it's responsibility of the agency or whoever to track that down and either collect the money or the ribbon on it.
Well, I don't know what the counties are doing. I know we got the notice earlier.
I'm assuming they have a statutory obligation to notify. So if they're following the statutes, then it's incumbent on us to follow up and make sure that if we're due money that we receive it.
Well, I know that library district.
There's nobody out there. There's nobody out there saying MPCL, you need to go, or MCPL, you need to go track down this $100,000 to $500,000.
Well, I wonder
that's not that
because let me ask, then I'll go back to the first part of the TIF process. I know our district is very active in going to the legislative bodies when they're tracking initial discussions of tax increment financing. Do we now keep anywhere in-house an action, a legislative action on the part of the city of Lee Summit or the part of the city of North Kansas City or whatever as to when a TIF starts? And then you can track. Right. We could certainly follow that because TIFs are not necessarily always 23 years. I mean, there are different years. So do we keep track of legislative actions that initiate tax increment financing to the three counties? Because I know we appear. I know, and that's great. But
not that I'm aware of. But the number is not that great in terms of the ones that we expect to expire. We can look into it and get back to you. I guess the question for me would be if they're required to notify us, what's the return on investment in terms of the time we spend in tracking TIFs?
Well, I thought maybe just keep a file. And I can't. What was the one that Jackson County mentioned back earlier? How much was left in that fund? Do you remember that? I don't remember.
If you're referring to the one in Independence, It was in the neighborhood of 450 or 500,000. Quan, you can correct me if I'm wrong, but yeah. Right, and the turnaround time to notice to deposit a check was, I would say, in the neighborhood of a month to 2 months, relatively quick. I mean, from when we were notified to when we received the check.
Yeah, and I don't know if the cities actually approved theirs. I don't know if they follow them later on. So it's just something that now we're into the budgeting.
But
It's the concern
but from a budgeting standpoint, Bob, we're not in control of that. And we need to budget what we can control and what we know. Whether those things expire next year, the budget impact should be zero because we're not going, I mean, the cost to track that. And I agree with Aaron, the return on investment, I don't think it's anywhere near what the cost is going to be. I kind of look at those as gifts, you know, you get money, great, stick it somewhere and don't spend it. And because it's a one-time revenue item. That's my view. I just.
I'm not suggesting
I think we're.
Plan on it.
But again, we're spending a whole bunch of time on this, and the conclusion, the feedback from management is that we don't have the resources to do this. And I think you keep bringing it up, and which you're more than welcome to do. But I don't see where we should change where the library management should change how it's handling this.
Well, I'm not intending that. It's just that someone, and I don't know if the county officials do this. I don't know if the city officials who initiate it and approve it. I don't know. I know that taxing and financing districts are supposed to file annual reports with the state. Now, I don't know if the state tracks this.
I don't know.
Yeah, I don't know. I have a feeling that,
There are people that think we shouldn't do any TIFs, and there are people who say you can't do development without TIFs.
oh, I see. I on both sides of that. Now, the other thing that I want to mention on we have these open appeals. I'm sure for all the, well, this is Jackson County, but open appeals now have a residential appeal value of over $1 billion. I know this probably, I assume payments will be made this year, even if there's a protest in process. That people are still going to be paying their taxes even under a protest. And I know Jackson County has had thousands of appeals for this year. We assume that most of those are settled by the first half of our fiscal year in terms of if there are payment differences.
Jeremy.
Hold on, didn't we talked about this last time? Okay, and as I recall, okay, they can appeal that, but it was at a 90-day period. So where we might have received it historically in December, we're going to get that maybe in February, March, or April. Okay, so again, we have a timing effect on the receipt. They can take the appeal further, but that money will still come in. So if there's a reduction in the value, I guess the question is whether it's going to be material to the total and whether we need to make budget adjustments, but it doesn't sound like that. The other side is, we have the line of credit in place, and if there's a few $100,000 or whatever, I don't think it's going to be material to our cash flow at the time because most of our cash comes in by February. So I don't see this having a huge impact, or at least that's my view, in terms of how we operate. And again, it's different than the delinquent taxes that just don't get paid, and they get paid at some point down the road. Again, we're talking about a few months, maybe 3 to 5 month cash flow spread, and I don't see that it should impact us materially.
Well, obviously, from a fiscal year standpoint, you have an initial 6 months for collection purposes for the fiscal year because we plan for a fiscal year. But when I saw it was over $1 billion, I thought, and I don't know how rapidly they're settling these. Let me just say that I appealed mine and lost, so I'm dealt with. I get to pay the new tax amount. But regardless, a lot of people are having their assessments reduced. They should be. Those people will obviously get correct tax bills. I just didn't know the cases that are settled late in the year. I don't. It's probably not going to be paid in 2023. I'm sure some degree of that will be paid. I don't know how it's done, and I know we did it in 19, and I know we talked about it previously. 2019. I think you said that basically things were settled out before the end of the fiscal year. So,
That's,
yeah.
yes.
And I just don't know how much more, I just know there were a lot more cases that,
Well, but again, it's a question of the cash flow. And even if they're 10% overvalued, it's 10% of the tax, it's the valuation, and reduce that by 10%. And, you know, and that's the haircut that we'll take at some point down the road. When I don't, do they pay 90% in, or do they withhold part of it? Quan, what's?
The county, we are hold from the up to 90 days. And historically speaking, during the assessment year, the delinquent tax is lower, and non-assessment year, the delinquent tax is higher than average. So if we, for whatever reason, we don't receive them before the end of the current fiscal year, we will receive majority. Of
yeah, that's right. You feel comfortable, it will be still within the next 6 months of the calendar year, which is the last 6 months for a fiscal year. So,
Yes.
okay, that's fine.
All right, so let's get back to the matter at hand, which is the levy calculation we have to approve. Are there any questions on the 2.911, which is based on final values from the county? It has been certified by the state, and that's the levy that we need the board to approve on Tuesday. And just for the record, again, that has to get communicated back to the counties no later than September 30, which is whatever. Anyway, has to be in the mail on September 30th. Okay. So that's what's on the table, and I'd like a motion to, unless there are further questions, a motion to move this to the board. And so I need a second.
Well, I'll second. So, and we are seconding a levy for the district at 0.2911
Correct.
per $100.
That's correct.
That's right.
Trace, will you take the vote?
Ms. Wyckoff? Mr. Thies?
Yes.
Dr. Pandolfi?
Aye.
Mr. Cook?
Yes.
Mr. Johnson?
Aye.
Motion carries.
All right. Thank you. Okay. Gosh. Have any other business? Did we miss anything? Yummy? Do you have any other business?
No, I'm good.
Bob?
No.
All right. And I don't either. So with that, I'll ask for a motion to adjourn.
So move. Second.
And will you take the vote? Teresa?
Yes. Okay. Ms. Wyckoff? Mr. Thies?
Yes.
Dr. Pandolfi?
Aye.
Cook?
Yes.